If you're only watching tech stocks, if your entire future depends on paper money, if you think mining stocks are boring, then you're already late. Because every major wealth shift in history happened before the headlines, not after them. When currencies weaken, when governments print, when inflation hides in plain sight, money doesn't disappear, it moves. And where it moves next is not speculation. It's resources, gold, silver, copper, energy metals, the things the world cannot function without. In this video, I'm not giving hype, I'm not giving pump names, I'm giving you 5 mining stocks with strong fundamentals, real assets, and a long-term outlook that aligns with where the global economy is actually heading in 2026 and beyond. This is not about getting rich overnight. This is about positioning before pressure hits. Why mining stocks matter right now. Every empire in history collapsed under one common problem. They debased their money. When confidence in currency falls, hard assets rise. We are entering an era of persistent inflation, currency competition, energy transition, infrastructure rebuilding, geopolitical fragmentation. All of that requires raw materials. You can't electrify the world without copper. You can't stabilize trust without gold. You can't industrialize without silver and steel inputs. Mining stocks are not a trend. They are the foundation layer of the global economy. Before we go any further, this video is for educational purposes only. This is not financial advice. Markets carry risk. Always do your own research. The goal here is understanding opportunity, not blindly following picks. Now let's get into the real analysis. How these picks were selected. Balanced strategy. These 5 stocks were chosen based on asset quality, cost structure, geopolitical exposure, long-term demand trends, balance between stability and growth. This list includes 2 conservative established leaders, 2 growth-oriented mining plays, 1 asymmetric wildcard. That balance matters, especially in uncertain times. Stock. Newmont Corporation, gold stability core. Newmont is not exciting, and that's exactly why it matters. It's one of the largest gold producers in the world with diversified operations across multiple continents. Gold is not about speculation. Gold is about trust erosion. When real yields fall, when debt rises, when currencies compete, gold doesn't need growth, it needs fear. Newmont benefits from scale, lower geopolitical risk compared to smaller miners, dividend potential, long reserve life. This is the anchor of a mining portfolio. Not a rocket ship, but a stabilizer. Why gold still matters. In 2026, central banks are still buying gold. Emerging markets are reducing dollar exposure. Debt levels are historically extreme. Gold is not anti-growth, it's anti-instability, and Newmont is positioned to survive cycles, not chase peaks. Stock 2, Barrick Gold. Efficiency and scale. Barrick is different from Newmont. It focuses aggressively on cost discipline and tier 1 assets. That matters because in mining, revenue fluctuates, costs kill. Barrick's strategy is simple. Fewer assets, higher quality, better margins. When gold prices rise, efficient producers benefit disproportionately. Barrick is a conservative pick, but conservative doesn't mean weak. It means resilient. Gold versus tech, a quick reality. Check. Tech depends on sentiment. Gold depends on fear and math. In periods of volatility, rotation happens. And when rotation comes, gold miners are often late cycle winners. If this breakdown is helping you think differently about markets, take a second to like the video and subscribe. And I know you're already with me on this. Now let's move into where real growth potential starts to appear. Stock 5, Pan American Silver, decked the wild card. Silver is misunderstood. It is both. A monetary metal, an industrial metal that makes it explosive in the right conditions. Pan American Silver offers exposure to silver upside, geographic diversification, leverage to inflation, plus industrial demand. Silver historically lags gold, then overperforms violently. This is not a safe pick. This is an asymmetric one. High risk, high reward. Why silver could shock markets. Silver is used in solar panels, electronics, medical tech, and yet supply growth is limited. If inflation returns aggressively, silver doesn't move slowly. It jumps. How these 5 work together, portfolio logic. This is not about betting everything on one idea. It's about positioning across scenarios. Gold protects. Copper grows, silver explodes, streaming stabilizes, balance beats prediction. What could go wrong? Real talk. Mining stocks are risky. Commodity prices fluctuate. Political risk exists. Environmental regulation matters. That's why position sizing matters. Patience matters. Emotion kills returns. This is a long-term game. Final thoughts. the bigger picture. We are not entering a normal decade. We are entering monetary competition, resource scarcity, energy transition. Stress, mining stocks sit at the intersection of all three. Ignoring them is not conservative, it's blind. History rewards those who position early, not those who react late. By the time everyone agrees resources matter, the opportunity is already gone. This video is not a promise, it's a framework.